And we are live. Good evening, everyone. Tonight we will be discussing Boeing's recent call for a bailout for the entire aerospace industry to the tune of $60 billion. Yes, you've heard me correct. Boeing is calling for a bailout of the entire airline industry to the tune of $60 billion. And in my personal opinion, none of these companies deserves a bailout. They should be allowed to fail. The free market should be able to operate as it's designed to operate. These companies should be allowed to file bankruptcy. The only people that should be bailed out should be the employees. The executives should have their compensation clawed back. The shareholders should take a hit. The creditors should be forced to take a hit, because what we're continuing to keep doing after every boom and bust cycle is we allow these corporations to privatize the profits and socialize the losses, where they can do stock buybacks and they can pay out obscene amounts of compensation to their executives and give dividends to their shareholders and not hold that money as reserves for a rainy day, but to basically over leverage and game the system. And then when the bust happens, put all the losses on the taxpayer, and then not only leave the taxpayer stuck with the bill, but then give them a pink slip on the way out and then say, hey, we need a bailout. It's time for those things to stop. So as you guys come in, please like the video, share the video. If you're not subscribed to the channel, please subscribe, hit that notification bell. And also, YouTube does not send everyone my notifications. So if you're subscribed and you're not receiving the notifications, or you are a new subscriber and you don't want to miss any of my videos or any of my live streams, there is a link in the description to join my mailing list. Simply click that link, enter in your name and email information, and you'll be notified via email every single time I am live or I make a video. If you want to communicate with me and you want to talk to me, simply follow me on Instagram, send me a direct message, and we can continue the dialogue there. Also, if you want to financially support this stream, because with YouTube, you never know if your video will or won't be monetized depending on what you're talking about. A link to both my Cash App and my PayPal is in the description below. Now, right now, I want to read this to you because I think that this is important that you understand what moral hazard is and what do I mean by privatizing profits and socializing losses. It says, what is privatizing profits and socializing losses? Privatizing profits and socializing losses refers to the practice of treating company earnings as the rightful property of shareholders, while losses are treated as the responsibility that society must shoulder. In other words, the profitability of corporations are strictly for the benefit of their shareholders. But when the companies fail, the fallout, the losses, and recovery are the responsibility of the general public. Popular examples of this includes taxpayer-funded subsidies or bailouts. I want you to understand this, guys. This is extremely important that you understand. If a company is too big to fail, then that company is too big to exist. If a company is too big to fail, then a company is too big to exist. What should happen? And see, this is why it's hard for smaller companies to grow, because smaller companies, they can't take these insane risks that a Boeing can take, right? They can't go out here and fail and be rewarded. See, the way a market should function is that once this company goes bankrupt, other companies should be able to come in and buy their assets for pennies on a dollar. And new innovative companies and new innovation should happen, right? And the old dinosaurs should be wiped out. But what begins to happen is because they can lobby, because they have, a big employee base, they can say, hey, we're one of the largest manufacturers in America. So, hey, if you let us go under, It's going to destroy their whole manufacturing base. And see, this is the problem. And then they're going to get these bailouts, and there's going to be no guarantees on these companies to hire Americans, to build in America, right? There's going to be nothing put in place, as what happened with General Motors. When they got the bailouts, they then took those jobs and shipped them over to China. This is egregious. This is unsustainable. And this is not what capitalism is about. This is cronyism to the highest degree, and it should be stopped immediately. The only people who should be bailed out is the employees. That $60 billion that they're calling for the entire aerospace industry should go to the employees. And there should be a fund put in place so that the employees can get through this time. Now, let's check on the markets before we get to the meat of this presentation. As you can see, Bitcoin right now is up 15% for the day. It's at $6,187. Ethereum is at it's up 16.3% at $137. You can see Ripple's at 16 cents. You can see BCH, Bitcoin Cash, is at 222, BSV. So the market overall in the crypto space is up. And that's what I was trying to tell you guys. You're dealing with a very, very thin market when you're looking at crypto. It's a new and growing market. It's not a thick market like the gold market where it's an $8 trillion market. This is a tiny market, so it's easy for it to move. What you're going to begin to see is a lot of these markets, especially precious metals, because you know I'm a heavy investor in precious metals, as well as in crypto. You're going to start to see them decouple, because what's going to begin to happen is people are going to wake up to these $1 trillion stimulus packages, these $1 trillion bailouts, where the government is literally printing money out of thin air, and they're picking and choosing who wins and who loses. Eventually, this whole system needs to be reworked, and that's where crypto comes into play. Let's look at the overall markets. We can see the S&P was up 11 points. NASDAQ was up 160. The Dow was up 188. The Nikkei was down 173. So it's a pretty flat market across the board today. We can look at the S&P 500. You can see where we broken below. Once the Fed started this repo operations, they start pumping in trillions and trillions of dollars. That's why I do not allow them to use this virus and this crisis as an excuse. Boeing did nothing but stock buybacks, and I'm going to get to that in a second, to the tune of over $40 billion. So instead of them putting money to the side for a rainy day, they did nothing but stock buybacks. So when you seen this stock market rallying, as I said, the stock market wasn't rallying because of fundamentals. The stock market was rallying because of financial engineering, because these companies were doing nothing but doing stock buybacks. And I'm going to give you that information in a second. Just want to cover the markets real quick so you can see we're definitely just selling off heavy. We can see gold. Gold is selling off as well. And as I stated to you guys before, what happens is that your debt is denominated in dollars. And I keep trying to stress that to you guys so much. What gives the US dollar value is the fact that people's debt, your mortgage, your car payment, right, is denominated in debt. So when you see a huge sell-off, people have to raise capital because there's over $74 trillion of debt in the system, and there's only $1.6 trillion of actual physical cash in the banking system. So people get liquidated, and they're forced to sell things that may be profitable because they have to raise cash. That's where the decoupling will eventually come into play. So, and then we can see here, you can see Bitcoin. It's back in this, what I call a kill zone. And again, I'm not big on technical analysis. I do not make buying and selling decisions off of a line on a chart. I'm much more technical and fundamental as far as I'm not just drawing a line and saying buy here and sell here. That's not the way things work. I'm just doing that as a reference point. So with that being said, let's get into the presentation. So it says, Boeing seeks $60 billion in government aid for aerospace industry. It says Boeing said Tuesday that it is supporting $60 billion in government support for the aerospace industry. President Trump earlier said his administration will support Boeing, a top U.S. defense contractor and one of the two biggest airline makers in the world. The company has been grappling with the fallout of two fatal crashes of its 737 MAX. We appreciate the support of the president and the administration for the 2.5 million jobs and the 17,000 suppliers that Boeing relies on to remain the number one U.S. exporter. And we look forward to working with the administration and Congress as they consider legislation and the appropriate policies, the company said in a statement. So, as I said before, this is about privatizing profits and socializing losses. So I want to get to this article here because this article highlights exactly what I've been saying time and time again. It says why stock buybacks are dangerous for the economy. Follow me here. It says, even as the United States, and this article is from, I want to give you the date, January 7th, 2020. Even as the United States continues to experience its longest economic expansion since World War II, concern is growing that soaring corporate debt will make the economy susceptible to a contraction that could get out of control. The root cause of this concern is the trillions of dollars that major U.S. corporations have spent on open market repurchases, aka stock buybacks. Since the financial crisis a decade ago, in 2018 alone, with corporate profits bolstered by the Tax Cut and Jobs Act of 2017, companies in the S&P 500 index did a combined $806 billion in buybacks, about $200 billion more than the previous record set in 2007. The $370 billion in repurchases, which these companies did in the first half of 2019, is on pace for a total annual buybacks that are second only to 2018. When companies do these buybacks, they deprive themselves of the liquidity that might help them cope when sales and profits decline in an economic downturn. So rather than putting money away, all of these companies that are going to be running to the government and saying we need a bailout, they took $806 billion and did stock buybacks. And then it's disgusting now to turn around and tell you have to pick yourself up by the bootstraps. You have to pick yourself up by the bootstraps. You have to do everything right. Rugged individualism for you, right? But capitalism and profits for the shareholders, but then socialism when everything goes wrong. $806 billion. And see, notice that the last previous record was set right here. It says, I want to highlight this for you. The previous record before this was set in 2007. This, my friends, is known as the boom and bust cycle. Right? The boom, they create all this debt. They get all the monetary expansion, right? The Fed increases its balance sheet. The government does the fiscal stimulus. They cut taxes. And they get the cash out right at 2007 at the height of the market. And then the market crashes. And now here we are in 2017 and 2018. They get the tax cuts. They buy back their stock. They don't hire more employees. They don't pay better wages. They don't put money to the side for a rainy day. They over leverage. And then the market comes crashing down. It says, making matters worse, the proportion of buybacks funded by corporate bonds reached as high as 30% in both 2016 and 2017. Now, let's skip to the next paragraph because I want to get to something. It can make sense for a company to leverage retained earnings with debt to finance investment in productive capabilities that may eventually yield product revenues and corporate profits. Taking on debt to finance buybacks, however, is bad management. Given that no revenue generating investments are made that can allow the company to pay off the debt. In addition to plant and equipment, a company needs to invest in expanding the knowledge and skills of its employees, and it needs to reward them for their contributions to the company's productivity. These investments in the company's knowledge base fuel innovations and products in the process that enable it to gain and sustain an advantage over other firms in its industry. So instead of them taking that money and investing in trying to grow the business, they're just doing financial engineering. So that's why when Trump kept saying that the stock market is doing well, that the economy is doing well, and I kept banging the horn and banging the desk and beating the drum and telling you this economy is not healthy. And this is why you see the stock, when you see the stock market fall like this, let's look at the S&P 500. When you see the stock market fall like this, that means no buyers are stepping in. The reason why no buyers are willing to step in is because it was really just the companies buying back their own stock. It wasn't real demand, right? Markets operate off of supply and demand. This was all manufactured by the Fed keeping interest rates extremely low, by intervening in the repo market back from September 17th. And then when Trump did that tax cut, the companies took the tax cut and they brought back their own stock. So they created artificial demand that wasn't there. So when you see these markets crashing, no one's stepping in to buy the dip because no one was really buying these markets in the first place. It was corporations buying back their own stock. And I'm going to get to that right now and show you this in a second, right? So this is from Pam Martins. She's been on Wall Street for over 2 decades. She has been a whistleblower speaking out time and time again about the corruption on Wall Street. And you have to understand this. This has been going on for decades. I highlighted it. That's why I tell you guys, read The Creature from Jekyll Island. This is nothing new. This is corporate greed. This is corporate welfare, and it needs to stop. So she said, U.S. Treasury Secretary Steve Mnuchin and Wall Street pundits are all over cable news, repeating the mantra that this is nothing like the last financial crisis, while seeking to lay blame for all of the newly announced bailout measures for Wall Street at the feet of the crisis. But in terms of Wall Street privatizing profits and socializing losses, this is exactly like the last time. They're telling you that this is different. This isn't like 2008. But yet, all of the tools that the Fed is using are the similar tools that they used in 2008 because these companies, they have too much debt. But what do I tell you guys? Money is debt, right? You need money, right? Money tallies up to more than $9 trillion in cumulative loans made to Wall Street as super cheap borrowing rates. $9 trillion. And I showed you this guy. I showed this on a chart time and time again. Right here is when you seen the market begin to start taking off. Right here. This was that blow off top. So when you see the market crashing, the market's crashing because the only person that was buying this, basically, essentially, was the Fed. They were basically buying back the treasuries from their broker dealers, their primary dealers, and then they were putting that money into hedge funds, loaning that money out to go speculate in the market. So now when the market comes crashing down, this isn't mom and pop investors like you and I buying these markets. This is high frequency traders. This is algos doing this. This is not regular people. This isn't a capitalistic system. This is, I really don't even know what to call it. I would call it cronyism. It's not even socialism because it's not even benefiting the workers. You can't even call it socialism, right? So I want to read one more passage. Right? So she says, 1/2 hour before midnight yesterday, the Federal Reserve Board of Governors quietly rolled out one more in a string of bailout measures it has been announcing since Sunday night to deal with Wall Street's decade-long gorging on speculative debt, derivatives, stock buybacks, obscene pay, and its serial crime spree. Each one of these Fed programs is identical or almost identical to the programs the Fed operated during 2007 through 2010 financial crisis. If this were truly nothing like the last financial crisis, why would the Fed be using the identical measures to try to stem the crisis? The truth is that Wall Street is not going to let a national emergency go to waste. It's going to maximize bailing itself out while the public's attention is focused on a national crisis. I keep telling you guys, problem, reaction, solution. Like Rahm Emanuel said back after the '08 crisis, never let a good crisis go to waste. So now all of these companies like Boeing, who brought back their stock to the tune of billions and billions of dollars, are now going to leave you stuck with the bill. And you know what they're going to do with that money? Instead of them hiring more Americans, they're going to take that bailout money and go build plants and factories in other countries. Now let's get to that real quick. Spotlight, right? Zoom in real quick. So let's get to what Boeing was doing. Spotlight on Boeing buybacks amid latest crisis. Questions are circling about Boeing's financial engineering after $43.4 billion, blowing $43.4 billion on share buybacks over the last 6 years. In fact, Boeing's free cash flow for the last decade totaled $58.3 billion, of which 74% were spent on stock repurchases. It now faces dual crises, including the 737 MAX, that's when their planes kept crashing because they were malfunctioning, and now with the virus. Think about that. They had $58 billion of free cash flow. They spent 74% of it on stock buybacks. They didn't take the money and, again, hire people, teach their employees new skills, buy better equipment. Now, some of you are asking, and I've explained this before, but I know there's new subscribers coming in. So guys, understand that if you see me repeat things or hear me repeat things sometimes, it's because my channel's growing by 50 to 100 subscribers every day. So there's new people coming onto the channel. So sometimes I have to repeat things so that they can understand. Stock markets operate off of supply and demand, right? So if demand remains the same, but you buy back your stock, you're taking stock out of circulation. Right? So if you had 10 shares outstanding, but you personally buy back that stock, it artificially pushes up the price, and it allows when other people buy your shares to push the price up faster, and it allows you to beat your earnings because you have less shares outstanding. Remember, earnings are based per share you have outstanding. So if you buy back that supply, now it's easy to say, hey, look, company's doing well. We beat our earnings. But in reality, you really didn't beat your earnings. You just brought back your stock to make it look like that on paper. This is what is known as financial engineering. Like you'll see a lot of companies, they'll do accounting tricks where the company will have the same amount of debt. They'll owe $100 billion or $10 billion. But instead of it maturing in 1 year or 3 years, they'll break those payments out to, 15 years or 20 years and say, see, look, the company's paying down his debt. All they did was just extend the debt to a longer period. But that's known as accounting tricks. It's gimmicks. It's tricknology. It's not a business producing a better product or a superior product. It's really just gaming your balance sheet and moving money around and moving debt around. So when you see Trump coming out and saying we got to cut taxes for the rich, trickle down economics doesn't work. It's never worked. It never will work. And it's time for people to understand that this is not about being a conservative Republican. This is not being a liberal Democrat. This is about understanding how economics work and how a system should work. This is why we have bankruptcy. This is why companies should be allowed to fail. And CEOs should not make $30 million for the company to fail. If a company is too big to fail, then the company should not exist. So now let's get into some of the things that Boeing was actually doing. Right? So how is Boeing able to generate so much free cash flow? What were they doing? Let's get to it. It says one reason it could was because of savings on the company's latest aircraft program. The now notorious 737 MAX, grounded after 2 recent crashes, killed 346 people. Instead of building a wholly new aircraft, Boeing simply bolted new fuel-efficient engines on a tweaked existing airframe that significantly reduced the airframe development cost of the project, according to company insiders. Boeing was able to redirect some of those savings to repurchase stock instead. So they didn't really want to go and innovate and create a better product, right? They just wanted to tweak a little bit of the fuel economy here or there. And this is why they're having so many problems with the plane crashing, because they tried to cut corners on the development of this plane. They didn't focus on making a superior product. They wanted to game the system. Right? They wanted to game the system. And by them gaming the system, made them create a flawed product already. It illustrates a choice that many chief executives have willingly made to prioritize buybacks over investment. In this, they have received little but encouragement from their financial backers. Share repurchases seem a good bet to investors who are highly focused on short-term share price performance compared with the uncertain and longer-term gains from new product development. That's what entrepreneurs do. Entrepreneurs invest in people, in products, and in service. What these companies are doing, like FedEx did the same thing. I highlighted that for you, just like American Airlines did the same thing. They brought back their stock and paid their CEOs millions of dollars. And we're going to get to that in a second. Who benefits from this optical leverage? Not necessarily the shareholders. Buybacks tend to happen when the share prices are rising anyway, exposing them to the risk of the company destroying economic value by repricing overpriced equity. The biggest winners are managers, especially those whose remuneration is tied to stock market measures such as earnings per share growth, which stands for EPS. Take Boeing's chief executive Dennis Muilenburg. Since becoming the boss in 2015, his pay has doubled. Last year, he took home a thumping $30 million in compensation and gains from exercising options. I want you to think about that. During the housing crisis, they blamed poor people. They blamed poor people during the housing crisis. They said you got too many houses that you couldn't afford. They didn't put the blame on the bankers who have PhDs, they have MBAs. They should have known better not to be loaning that money in the first place. But it goes back to the incentive. See, it goes all back to what are the incentives in your economy? What are the incentives based upon? Well, the incentives is about beating earnings per share, right? Earnings per share growth. So it's just about buying back your stock. It's not about incentivizing you to create a superior product. It's not about incentivizing you to how many people you employ, how many sales you actually make. Nope. It's about how can I rig the system? And this system has to be changed. This man made $30 million in total compensation. And now they're going to go to the federal government, you the taxpayer, because you're going to pay through inflation. And you're going to pay through your taxes, and you're going to pay through your losing your job. And I guarantee you there will be no guarantees as to what they need to do with this money when they receive it. This is not about capitalism. This is not about free markets. I'm all for competition. I'm all for, if this man made $30 million because he created a superior product like the iPhone, or he created a superior product like the iPad, I wouldn't have no problem with that. They lobby your government to get regulations rolled back, to not pay you a fair wage, and then to leave you stuck and to hold you hostage. And I read this the other day, and I'm going to read it to you guys again, because you need to understand where this comes from and how this keeps happening. I'll give you another one. Again, The Creature from Jekyll Island. Let's flip over to the iPad. I keep telling you guys, go get your hands on this book. Even if you can't get the book, listen to the audio book. Lockheed Martin received a bailout in 1970. Now, I talked to you guys about the Chrysler bailout. I talked to you about the GM bailout, the Chrysler bailout from 1978. Not the one from 2008, not that auto bailout, but from 1978. Now, Lockheed Martin was bailed out in 1970. It says in 1970, let me show you what I'm reading. I'm reading right here so I can highlight it for you. I just highlighted it. In 1970, the Lockheed Corporation, the nation's largest defense contractor, was facing bankruptcy. the Bank of America and several smaller banks had lent $400 million to the Goliath and did not want to lose the beautiful income that flowed from that. So they joined forces with Lockheed management, stockholders, labor unions, and descended on Washington. Sympathetic politicians were told that if Lockheed were allowed to fail, 31,000 jobs would be lost. Hundreds of subcontractors would go down. Thousands of suppliers would be forced into bankruptcy, and the national security would be seriously jeopardized. What the company needed was to borrow more money and lots of it, but because of its current financial predicament, no one was willing to lend it. A bailout plan was quickly engineered by Treasury Secretary John B. Connally that guaranteed payment on an additional $250 million in loans, an amount which would put Lockheed 60% deeper in the debt hole. This has been going on time and time again for decades. This is nothing new. They're going to use this virus as an excuse to bail out these companies because they were taking on too much debt during the boom. It's known as the boom and bust cycle, and we average a recession every 8 to 12 years. This has been going on over and over again. I told you guys in 1975, New York City was bailed out. It's right there. It's been going on time and time again. And see, if you study history, you will understand why I'm so bullish on crypto, why I'm so bullish on gold and silver, because I understand that this system is unsustainable. And this is why you see the price of gold soaring, because when you go and you look at the bullion dealers, like I said to you before, they're sold out, right? Due to extreme order volumes, please expect shipping delays of 15 plus business days. We also have a temporary $299 order minimum, right? Because your US dollar is currency, it's fiat. That's not money. It's just a medium of exchange. Money is something that holds its value. We know that the dollar doesn't hold its purchasing power. It's lost over 90% of its purchasing power. Let me flip this over, show you guys. Right? This is go on AppMex, go on the Indian bullion dealer. They're telling you they're having shortages. Time and time again. And let me take a sip of water real quick. My mouth is getting dry, guys. Right? Now, you notice how in the book the passage I just read to you from the book, they spoke about if they were allowed to fail, it would cost the economy 31,000 jobs. And they are one of the nation's largest suppliers, right? Now, let's go back. See, history doesn't repeat itself, but it damn sure rhymes. We appreciate the support of our president and the administration for the 2.5 million jobs and 17,000 suppliers that Boeing relies on to remain the number one U.S. exporter. So what they're saying is that, hey, listen, man, right? We need that. We need the bailout. 2.5 million jobs are at risk. 17,000 suppliers are at risk. Doesn't this read just like what happened with Lockheed Martin in 1970? There's nothing new here. This has been going on for decades. Now, some people, they actually still have some integrity, right? Former UN Ambassador Nikki Haley resigns from Boeing's board, opposing government aid. Now, she could be doing this for political reasons, right? But at the end of the day, she's doing it. And that's what needs to happen. It says former UN Ambassador Nikki Haley stepped down from Boeing's board of directors after less than a year because she opposes government aid to help the aircraft manufacturer weather the crisis, the company said Thursday. The company said in a filing that Haley is against the company receiving government aid as a matter of philosophical principle. While I know cash is tight, this is equally true for numerous other industries and for millions of small businesses, Haley said in her resignation letter. I cannot support a move to lean on the federal government for a stimulus or bailout that prioritizes our company over others and relies on taxpayers to guarantee our financial position. I have long held strong convictions that this is not the role of government. She said because of that, the proper thing to do is to resign, as she should. As she should. The only people who should be bailed out should be the employees and should be the taxpayers. Those are the only people who should be bailed out. Executive compensation should be clawed back. The creditors who loaned out this money should be forced to take a hit. And the company should have to restructure if the company can be salvaged through bankruptcy court. And small or mid-tier businesses should be allowed to step in and acquire certain aspects of the company to grow. That's how capitalism should work. It shouldn't be this boom and bust cycle where the rich get richer and the taxpayer get poorer through inflation and through taxes and then through losing their job. So her stepping down is exactly what she should have done. And if you want to take it a step further, a lot of these CEOs should be put in jail. Especially after what happened with the plane continuously crashing the way it did. You cannot deny this anymore. Now I want to play something for you because this is going to be very telling as well. Make sure this is muted. Bring this up a little bit.
And replace the entire management team. If Washington decides an equity stake in the company and replace the entire management team. If Washington decides to buy equity stakes now, President Trump says there will be strings attached.
In some cases where they did certain things over the course of the years, including buying back stock. You know, they bought back stock and they paid a high price for it, as it turned out. But maybe I view that as a little bit differently than somebody that didn't, than somebody that built plants all over the United States, of which there were plenty of them too.
A Republican version of that $1 trillion stimulus package released tonight does not mention Boeing by name. It does provide for $58 billion in relief for air carriers and $150 billion in relief for other eligible companies. Most notable in this package, though, is what the bill provides for those direct cash payments. $1,200 for individuals who made less than $75,000 in 2018. Lower amounts for those making between $75,000 and $99,000 in that year, and no payments for individuals making more than $99,000.
So now think about this. They're going to give you $1,200 and they're going to say, hey guys, we're here to help the small guy. They're going to give you $1,200 and say, hey, we're here to help the small guy. But right here, it says, take Boeing's chief executive, Dennis Muilenburg. Since becoming the boss in 2015, his pay has doubled. Last year, he took home a thumping $30 million in compensation and gains for exercising options. So they're going to make it seem like for you, they're doing so much to help you. This is no different than what the banks did in 2008. No one should be bailed out. I want to show you guys this right here. Let's zoom in on this. Right? This is from American Airlines. Right? This is not unique to just one company, right? So whether it's Boeing, whether it's American Airlines, I showed you this the other day. Doug Parker. In 2018, he made $11.9 million. In 2017, he made $12 million. In 2016, he made $11.1 million. Robert Issom, the president, $6 million in 2018, $7 million in 2017, and $6 million in 2016. And this is American Airlines, and they need a bailout as well. So they get all of the boom. They get all of the reward, and then you get stuck with the bust. And they're going to tell you, you just got to work harder, man. You have to believe in the system. How can you believe in a system when a system doesn't even believe in itself? This system doesn't believe in fairness, equality, competition. John D. Rockefeller said competition is a sin. See, it's a cartel. And if you understand how cartels operate, the cartel operates they want to create the illusion of competition. But when you really begin to take a step back, you start to see there's really only 3 or 4 major competitors. Look at most airlines, telecommunication companies. So they give you this illusion of fairness, this illusion of competition. But in reality, they're colluding to create a whole bunch of regulation that makes it hard for new competitors to enter into the market, right? And then they get so big that then now they can hide behind the idea, well, you can't let us go under, because if you let us go under, then people are going to lose jobs. And then they fix prices and they buy politicians through lobbying, right? Through donating, right? And giving to campaigns, right? This is an entire system that's put together that's sophisticated this way. So they rig markets, they kill competition, they buy up smaller competitors, and they create a barrier to entry. So you can't even compete in the marketplace. The marketplace should operate where they should go bankrupt, and smaller and mid-tier businesses should be able to buy their performing assets, and they should have to restructure through bankruptcy court. But it doesn't work that way. We have a banking cartel. We have an information cartel. We have an airline cartel, and all of these people are operating and working together. And they know what they're doing. There's 221 of you guys watching this right now. Please, guys, hit that like button. It helps the content rank. Now, when Trump says that, what he just said here about making jobs here and stuff like that, no, it should not happen that way. There should be, if you know, they're going to bail these people out. And I know some of you're Trump supporters, and I'm not here to bash you. I don't get into, because both parties are flawed. This whole left-right paradigm it's a flawed system to begin with. Choosing the lesser of two evils is always choosing evil. But in the ideal world, if these companies were bailed out, there should be some guarantees and mandates put in place that they have to build plants here. We need to bring back the manufacturing base into this country. We have to get out of this debt-based Ponzi scheme system. Right? We need to understand that we need manufacturing here. We need real jobs. Having an economy. This right now is happening with this crisis should show you that globalization isn't something that we should be aspiring. On Thursday, 48.8 billion, 12.5 billion, 13.2 billion, 85 billion, 10 billion, 142 billion on Tuesday, 46 billion on Tuesday, 19 billion on Tuesday, 129 billion. Do you understand? In 1 week, if the banking system was so healthy, if the economy was so robust, the Fed had to inject $500 billion, and that's just into the repo market. Over and over again. When the Fed says that they're increasing their balance sheet, they are printing money out of thin air. And to show you guys, because I know some of you don't understand what I'm talking about, I'll make it very simple for you. I say this time and time again, and I know some of you are tired of me saying this. You don't need a PhD in economics to figure this out. If you are creating money out of thin air, the Federal Reserve is not a government institution. It is a private institution that has shareholders. This isn't a conspiracy theory. This is a fact. This is a fact. You don't have to be a major intellectual to understand that this system is flawed. And I'll draw a little stick figure in some boxes to show you that it's unsustainable, that it's not complicated. So let's just draw a little box, and I'll do it nice and clean for you. And I'll make this green, right? Over here, you have what is known as the Fed, right? Let's erase this, matter of fact. Let's get this out of the way. I want to make a shape, right? So over here, you have the Fed. And then over here, you have the U.S. government. Not complicated at all. Draw a box. This is not complicated at all. With little boxes, I can show you how this works. And go watch the documentary Money is Debt. Go watch Too Big to Fail. Go watch The Big Short. I mean, these things are right here in your face. Over here, you have the government. So we're going to go, matter of fact, let's get a better pen. Let's put the brush pen. This would be the G-O-V. This is your government. This is your central bank, the Fed. Right? Your government says, hey, we're going to run a deficit. We need $500 million. So they say they need 500 mil. Okay. They create little pieces of paper with dead men on them called T-bills, treasuries. So they create $500 million of T-bills. And then they send this over to the Fed. Little pieces of paper with dead men on them. And then the Fed say, hey, we're going to send you some other pieces of paper with dead men on them. The Fed sends them the $500 million of cash that they need. And then just like that, money's created. But what you don't understand is that this $500 million that they're sending to the government, it has an interest rate attached to it. So again, you don't have to be a PhD in economics to figure this out. If this $500 million that the Fed created out of thin air, because they have no reserves, okay, has a 3% interest rate on it, and your government says, hey, we got productive citizens. Our citizens, they have jobs. We have companies like Boeing and Apple and Amazon. And we're going to pay you back through the tax receipts, right? So you pay back this $500 million. So eventually, like a good country, you pay the Fed back your $500 million. Well, if that's all of the money that's in circulation, how do you ever pay off the interest? Right? Think about it. How do you pay off the interest? If you pay back the $500 million that was credited at thin air, you still got to come up with the interest payment. So how can you ever pay back this 3%? So it perpetually keeps you in debt. And this is how you understand that money is debt. And when you get this, it's not complicated, that you can see that the system is designed. It's flawed in the way that it's designed. And you can't have free market capitalism if you have 12 men getting in a room and planning interest rates, centrally planning your economy. And when your government's picking and choosing who wins and who loses, who gets bailed out and who doesn't, who gets a tax break and who doesn't, who gets the government contract and who doesn't, that's not a healthy functioning economy. And then now you have to understand that there's central banks all throughout the world. So you have the Bank of Japan. Then you have the Bank of England, the ECB. And now you have the Fed. And you see this happening time and time and time again. I was able to show you this with a little box. Now, some of you are going to say, oh, it's complicated because, you got to worry about, you have ZIRP, zero interest rate policy. You have the Fed funds rate. You have the lending facility. See, they come up with all of these fancy terms to confuse you. A CDO squared, derivatives, right? Interest, IOER, interest on earned reserves. That's all a game. And when you understand that, it's all about money printing and rolling over debt, right? Because you are the asset. You are what gives the dollar value, because you are the one that uses it, because you are the one who you took out a $60,000 student loan. And if you don't pay that student loan, your credit's destroyed. Your life's destroyed. Your life gets destroyed. So you give that dollar value, because your your entire livelihood is based upon debt denominated in dollars. And they understand that, which is why you need a sound monetary system. Whether it's backed by gold, whether it's backed by silver, It needs to be backed by something tangible that can force governments to stop debasing it. It needs to be backed by something that when a company like Boeing goes under, they don't hold the entire economy hostage. Now, to put this into perspective, let's flip it back over. Because I don't want to always be negative about things. I also want to give you some different ways of looking at stuff. Mark Cuban said something, as he should. He said, Mark Cuban says bailed out companies should never be allowed to buy back their stocks ever again. And I agree. It says billionaire entrepreneur Mark Cuban told CNBC on Wednesday that companies that get federal assistance in response to the epidemic should be prevented from buying back stock ever again. No buybacks, not now, not a year from now, not 20 years from now, not ever, Cuban said on Squawk Box, because effectively you're spending taxpayer money to buy back stock. And to me, that's just the wrong way to do that. Thank you for the donation. He's on fire. Thank you so much for the meat and bones. No seasoning, truth, bro. Appreciate the donation. This is how things should operate. Right? Now, this is a joke. He also said, whatever we do in a bailout, make sure that every worker is compensated and treated equally. I totally agree. In that the executives don't get rewarded extra to stick around because they got nowhere else to go. On Tuesday, Cuban first argued that any assistance must be designed to reduce inequality between executives and workers. If we're going to bail out companies, we need to make sure all employees benefit from a turnaround, not just execs. Oh, I read that wrong. I agree with that. I agree. I totally agree with that, because stock buybacks drive inequality as well. And for some of you who just came in, I want to read this for you again. Right, this article is from the Harvard Business Review. And that's another thing too, guys. I do my best to bring you credible sources or sources that you can vet yourself. I'm not a person who wants to come up here and give you a lot of opinion. I'm not really big into conspiracy theory. I love to bring you information that you can go and verify yourself. You can go and look up what a stock buyback is. You can go to the New York Times and read the articles that I've read. You can go back to the Wall Street Journal, Bloomberg, etc. I just simply give you my perspective and my insight on said information, which I should be doing. But again, it says why stock buybacks are dangerous for the economy. And we're seeing that now because they don't produce anything. They only produce the stock market going up, right? We need to start creating an economy that bails out and helps the small man, not big execs. It says even as the United States continues to experience its longest economic expansion since World War II, concern is growing that soaring corporate debt will make the economy susceptible to a contraction that could get out of control. The root cause of this concern is the trillions of dollars that major U.S. corporations have spent on open market repurchases, aka stock buybacks, since the financial crisis a decade ago. In 2018 alone, with corporate profits bolstered by the Tax Cut and Jobs Act in 2017, companies in the S&P 500 index did a combined $806 billion in buybacks, about $200 billion more than the previous record set in 2007. The $370 billion in repurchases, which these companies did in the first half of 2019, is on pace to total amount of buybacks that are second only to 2018. When companies do these buybacks, they deprive themselves of the liquidity that might help them cope when sales and profits decline in the economic downturn. It's there in your face. It's there in your face. I don't care if you are a Republican or if you are a Democrat, you cannot deny that what's in your face. The stock market went up because of what was happening in the repo market, and it went up last year because of what happened with the tax cut that the rich received. And now we're seeing the fruits of that. That these companies, they are lean and mean, and their CEOs are doing nothing but getting paid millions of dollars. And now you are going to lose your job. They're going to print trillions of dollars and cause massive amounts of inflation. And it still is not going to benefit the everyday worker. This right here is American Airlines. 11, 12, and 11 million for their CEO. CEO of Boeing took them a thumping $30 million. And they're going to tell you that this is the free market. They're working hard. This is not free market capitalism. This is cronyism. And it needs to stop. No one should be bailed out. If anyone should be bailed out, it should be the employees at Boeing. It should be the employees at American Airlines. But we know what's going to happen. And this is why I said to you guys, this is why I buy precious metals. It's not that gold produces anything. It's not that it's meant to make you rich. It's meant to protect your purchasing power. That's the sole purpose of it. I show you this chart over and over again. I show you this graphic over and over again. So that you can understand. Since the Federal Reserve Act was created in 1913, your dollar has lost 90% of its purchasing power. I don't buy gold because I'm going to buy this little coin and get rich. If I have wealth, if I have $100, $200, $300, $400,000 of wealth, and I want to protect myself, and I want to have an insurance policy against inflation. If I worked, think about this every day. See, this is what a lot of you guys miss. Thank you for the donation. Because I get a lot of trolls that come on my videos, and they say, oh, what does a little gold coin do? What does a little gold coin do? I've already broken down to you guys. I showed you the inflation graphic. Every year, on average, you lose 3% of purchasing power. Now, I want you to understand that you are trading one of your most valuable assets that you have. One of your most valuable assets that you have, which is time. You're trading 40 years of your life for green little pieces of paper that are losing 3% of its purchasing power every year. You can never get back your time. Don't you think that you want to get paid in something that when you get ready to retire is actually going to be worth what you worked for 20 years ago? You can never get back your time. So shouldn't you get paid in something that's just as equally valuable as your time? Not pieces of paper with dead men on them that's going to lose 3% of its and that's if you believe the government CPI data. And you know I don't believe the government's data. That's if you believe the data that they give you. And we know that that data is inaccurate. We know that is inaccurate. We know that inflation is running higher than that. You know, I showed you this chart before. I'll show you this again. You can go look this up on your own. Right? This shows you how much purchasing power your dollar has today compared to 1971 when we delinked from the gold standard. Right? An ounce of gold, and I picked $35 because I like to value stuff, right? It's the Consumer Price Index. It's the Consumer Price Index. And what the CPI does is it measures how much goods are worth. But the problem with the CPI is it excludes certain things out of it where they can game it, which is why I said inflation is higher than 3%, right? So when you get paid $1 and you go into the store, when I was a kid, I can go into the store for $1 and I could buy a whole bunch of candy, chips, and everything. Depending on where you live, inflation runs higher. See, that's one of the problems of measuring it, because in California, the cost of living is much higher than it is, let's say, in a place like Tennessee, right? So now in 1971, $35 could buy 1 ounce of gold, right? So now this is measuring the goods and services. So your $35 to buy the same goods in 1971, it would take $223 in today's money. Now let's take a step back. I know you probably say, well, I don't really understand that, right? Because a lot of people want to play games. They want to play games with the whole, adjusted for inflation, not adjusted for inflation in real terms and nominal terms. Again, you don't need a PhD in economics to figure this stuff out. If I took $35 and I left it in my bank account, I lost purchasing power. It's still the same $35 from 1971, but it can't buy the same goods and services. If I took $35 and just left it in a bank account, in order for me to have the same purchasing power from 1971, I would need $223. Well, let's pull up a chart of gold. And if I took that same, right, not complicated, same $35. Let's move this out the way. If I took the same $35 and I just parked it in gold, let's go on the weekly chart. In fact, let's go monthly so we can get, we don't have to have those many bars. I took the same right here in 1971. I took that same $35. I would have today, if I sold that 1 ounce of gold, I would have $1,482. Which one made me money? Which one maintained purchasing power? Which one lost purchasing power? If I left it in the bank, I lost money. If I put it in gold, I maintained purchasing power and it even made money. Simple. So when people say to me, why am I buying these little coins? Because I want to preserve purchasing power. Now, when you look at stocks, when you look at real estate, when you look at crypto, those are speculative assets that if you time it right, you can make 10 times on your money, 15 times on your money. When it comes to real estate, if you buy it right, if you buy it in the right location, if you get the right deal, you have tenants that's going to pay back your mortgage. So your return on capital could be infinite if you understand how to structure deals. That's called speculation, right? If I buy Tesla at $10 and it goes to $1,000, I didn't know that was going to happen. That's called me speculating on that happening. There's a difference between protecting wealth and speculating. Right? I speculate in assets that I think are going to perform well. So, for example, silver right now, if you look at the gold to silver ratio, it's about 104 to 1. So right now, silver is a better speculative asset as well as a monetary. It has a monetary use because silver used to be used as money, right? But I'm looking to buy silver because it's going to outperform gold based upon the ratio right now. Right, so I'm speculating, but I'm also preserving wealth as well. Again, remember, what did I just say to you? If you are working and you have an IRA, you have a 401k, and you have $200,000, $300,000, $500,000 of your life, of your time that you've put out there, don't you want to get paid in something that's going to maintain value? Or do you want to put it in something that's going to lose value? Now, another reason why I like real estate is you can't grow more of it. It's fixed. And that's why I like gold as well, right? You just can't grow more land. And location, depending on where you buy, also can determine the value of that investment, right? I like to invest in things, right? There's a difference between a trade, something I'm speculating in, versus something I'm going to own for years to come. Big difference. Now, at a certain point, when the herd comes running in to the gold market, it's going to be a time to get out of gold. And I'm going to look to convert that gold, a lot of the positions I have in gold, I'm going to want to convert that into real estate or different assets. Remember, it's a pendulum. Things go from overvalued to undervalued. Right? So when some things are overvalued, I want to get out. And then when things are undervalued, I want to get in. So I understand what I'm doing and why I'm getting into things. Again, there's trades, there's speculation, and then there's investment, right? If I'm buying a cash flowing property, I plan on holding that and giving that down after the next generation. That's an investment, right? When I look at crypto, to me, that's a trade. I'm looking to hold this for the next 3 years to 5 years. Bitcoin hits a certain price and I want to get out. That's a trade. So I understand when I'm trading something, what the time frame is, what the risks are, and what the reward is. They're printing trillions upon trillions of dollars. This one gets a bailout, that one gets a bailout. We've seen that. That's going to debase your currency. I haven't had a chance, guys. A lot of you keep asking me. I'll take some questions now, since in fact, I'm beating a dead horse now. Do for self for you. You're right, Herb, saying I'm definitely a do for self. I'm a bootstrapper. I'm a striver. All of those things above, because I know at the end of the day, things aren't going to change. That's just the reality, because most people don't care. The reality of this is most people don't care, and that's why things won't change. And it's very easy to manipulate people. So I buy things that's going to protect myself. And I focus on things that I can control. I cannot control the federal government. I cannot control the federal government. I cannot control any of those things. I focus on things that I can control. I can't make the government not give Boeing a $60 billion bailout. But what I can do is I can profit off of it. And that's what I'm going to focus on. How do you feel about the carrot bars in the cash gold? I wouldn't touch any of those things. A lot of you have been asking me about the carrot bars things, and I just don't. I don't really see the value in it. I briefly looked at it. I need to look a little deeper. No, I won't be waiting for it, but I'll block you. Have fun with your ADOS people. Boop. Definitely will not be waiting for no check from no government. I don't do that. I'm going to focus on what I need to focus on. I will cash out silver when it hits 50 an ounce. I think it's going to probably go higher than 50 an ounce, Carl Black. Let's see what else is there. Mark J says, I will hit you with it when the times comes to be in 2 weeks or so. That's why risks involving when it comes to speculating. Gucci belts, Lambos are the real wealth preserver. I guess so. I still haven't had a chance to look at that despair. A lot of you messaged me with questions all the time, so it's hard for me to get around to things like Real Talk. Actually, he donated to me, so I had to fulfill that. But it's hard for me to handle my business stuff that I need to handle, research stuff, and then look at some of the things you guys asked me. Someone asked me about Boeing the other day, and I was telling them I really wasn't sure because a few people asked me about it, and after looking at the amount of debt that they have and stuff like that, most likely they're going to probably get bailed out. So it may end up being a good investment depending on which price you get in at, if the government's going to step in and bail them out. Because remember back in 2008, 9, and 10, when AIG, Fannie Mae, Freddie Mac, Bank of America were in peril and they were penny stocks, if you put $1,000 in there, if you put $5,000 in there, you would have made a pretty penny. So if you want to speculate, remember guys, speculate that the government is going to bail out the airline industry, you may want to look to put some, money to work if you have a 2 to 3 year time horizon. Oh yeah, no problem. The very first book that you should look at, I'll pull them up for you right now for some of you guys. Some really good books into crypto. And I'm glad you said that, because I'm gonna do a video about that tomorrow and talk about creating a book club. But you have the Internet of Money. It's hard to type when my iPad's in the way. The Internet of Money. Right? This is a really good book by a guy by the name of Andreas Antonopoulos. Right? So, The Internet of Money is a really good book. The Internet of Money is a good book. The Bitcoin Standard is a good book by Safadine Amos. It talks to you about what is money, what gives money value. Because what people don't understand, anything can be used for money as long as people can guarantee, as long as it's rare, right? Money has, because as I said before, money has to equal the amount of resource that's being expended for it, that's being traded for it, right? Like if I'm trading my time 8 hours every day, 40 hours a week for little pieces of paper, I need to make sure that I'm getting paid in something that can actually maintain that purchasing power. Thank you for the donation, Mr. Supreme Cinema. Enjoying the content, liked and subscribed. Stay safe, bro. Thank you. I appreciate it. And there's 210 of you watching this. Please hit the like button. But these are some good books here. The Bitcoin Standard, The Internet of Money, Digital Gold. And there's PDF versions of these books that are free online, as well as audio books. But they talk a lot about money. The problem with Bitcoin is that it's a new idea, right? And it's very clunky. It's not easy to use. So it's going to take time for people to catch on. But it's also an alternative asset. And as I said before, I'm not banking on. A lot of people are believing that Bitcoin may become like the reserve currency. I don't believe we're ever going to go back to some like gold-backed currency or one particular currency. But I do believe that we're going to get to a point where people are going to demand money that holds value. Right? So I really believe that people are going to do that. They're going to focus on finding money that actually holds its value. What are you doing to park some of your cash in index funds like the the Vanguard S&P 500? This is not financial advice, but in my personal opinion, I would say right now, I would be very hesitant about putting any money to work in broad indexes because you don't really know what industries are going to get bailed out and which industries aren't going to get bailed out. So you have to really take that time out to figure that out. I would be laser focused right now on exactly what I would take my time really to focus on what I want to put my money into right now. That's why I said I like to invest in things that I understand. I don't want to be in a broad index of things. So where the S&P is at right now or where the Dow is at right now, I believe that 16,000, 17,000 is where I'll start looking to put some money to work in the stock market. I believe that we have another 10 to 15% more to go before I would start looking to put money to work. For me personally, what do I have to say about network marketing? I first got started in network marketing. I think that network marketing is something that's good for new people who don't have a lot of capital who want to learn. But when it comes to making money, network marketing is useless. Most of the companies you're getting involved with, you're not going to make any money. And there are a lot of scams out there. That's just the reality. There's a lot of scams. The best thing to do, the best bang for your buck, is rather than joining a network marketing company, is really just starting your own business on your own. Network marketing made sense 10 years ago when the internet wasn't as robust as it is today. The internet is extremely robust now. It's extremely resourceful. You can have a YouTube page, a Instagram page, a Facebook page up and running for free. You can get a merchant like PayPal or use Cash App to process orders. I would just say, start your own business. I mean, network marketing is good for starters. If you just want to kind of feel your way around, meet some people, network, because that's the most important thing. The best skill that I got from network marketing was learning how to fail. Right? That was me. The best thing I learned when I did network marketing is how to fail and how to talk to people and realizing that 80% of people are really just, they're dumb. And they don't want to work hard. They don't want to do, like 80% of people are very lazy. And that's what I learned with network marketing. Like I would bring people into the company and they would just quit. And I didn't understand why. I used to sign people up in my network marketing company and they would pay $500 to join and they would quit a week later. And I just would never understand. I never could understand how you could pay $500 to join a business opportunity and not even try to make your money back. You know, but then I began to just realize like some will and some won't. And you just learn that over time. Like just some people will and some people won't. You know, so and like Tony Jones Clark just said, it also helps in public speaking. That's another reason why I started this YouTube channel, so that I could get better in my public speaking. That's something that I really wanted to work on. I wanted to get better in public speaking, and I wanted to develop, you know, being able to articulate myself better, and also being able to research stuff better, and you'll get better over time. So I think that's one of the best things that comes from network marketing. It's not about making the money. You're probably not going to make any real money. You'll probably make your money back, but no real livable money. But I just think that today there's things like, again, start a YouTube channel. You can start a Instagram page. You can start a Shopify store. Like there's just so many alternatives where you don't really need a third party as far as creating a whole compensation plan. You can create your own products and services and sell them. Let's see what else is going on. The Spear said, knowledge of self is important. I totally agree. You can do Uber Eats, Amazon, FBA, or start a YouTube channel. Leave MLM alone. It's dead at this point. Yeah, I would agree that it's dead, but I also feel that for people who are just getting started, I feel that it gives you that structure. I think that's the better way that I can say what I had to say. Like, I don't think that network marketing is going to make you successful. I think that it's going to give you the structure, though, for the first, 3 to 6 months to really grow. Like, it's good to be a part of a community. You really need to be a part of a community and an infrastructure when you first start being an entrepreneur, because being an entrepreneur is extremely hard. It's not easy. It's not easy to be an entrepreneur, and it's going to take you time to develop. And one of the hardest things about getting started is getting started at a time like this. Like, think about it, guys. When I first started my entrepreneurial career, it was in 2008. 2009 is when I first got started, and I went through all of the recession and the doomsday stuff, and you have to just really work that way out. And I think if I would have been in a better environment around people who are about growth and not went down that whole conspiracy theory path, like when I went down that David Icke and Alex Jones path, it set me back 3 years, because I became so negative and jaded that I thought that everything was a scam. I thought that the world was going to end and I shouldn't be focused on this type of stuff. And that's one of the worst ways to start thinking, because it becomes, like self-limiting. Like you have like very low expectations. So if you have low expectations, you're not going to want to save money. You're not going to want to, invest money if you think the world's going to end in a year, right? If you think the Mayan calendar is going to come true in 2012 and the world's going to end, why invest money? Why go to school? Why look for things in your future? Why look towards the future if you believe the world's going to end? So I really just think that type of thinking is very limiting. I think that it's very destructive, especially for young people. And that's why I would encourage you guys to get into communities, get into groups, go to networking events, even if it's not network marketing, but just try to get around some positive, optimistic people. They're realistic people. They live in reality, but they're also people who are going to give you some tangible things, some positivity, and direct you in a certain way. Because I think that that's one of the best ways to be. Because like I said, man, it took me years to really get to where I was at, and I struggled a lot. But a lot of my struggle was just listening to the wrong people. Listening to the wrong people will cost you a lot of money. And when I say money, I don't mean like physical cash. I mean money and missed opportunity, right? You will miss a lot of opportunity by listening to the wrong people. I'm not saying be a fool and just throw your money away, but if I didn't listen to David Icke and Alex Jones and them, I would have been much more successful years ago. I wasted a good 2 to 3 years of my life following those fools, and I wish I didn't do that. But I also think, it's a catch-22 because it made me better as well. Is a Coinbase wallet and vault safe? No, not your keys, not your Bitcoin. I tell you guys this all the time. You need to make sure that you have a wallet where you control your keys. I did a video on this the other day, how to download the Bitcoin Core wallet and get your private keys. I will put it in the chat for you. Copy link address. I will put it in the chat for you right here. Paste. Not your keys, not your Bitcoin. You need to control your keys. It's the same thing with your home, right? If you want to get into your home and you want to control what's happening in your home, you need keys to it. It's the same thing with your Bitcoin. If you're just starting, yes, use Coinbase, learn a little bit, take some time. But if you have some experience, there's no reason why you should be leaving your Bitcoin on an exchange. That's what is known as counterparty risk. And you don't want to have any counterparty risk. Check out Toastmasters group to get better at public speaking. It's good for networking too. One of the great things about the internet is it makes it easier to meet people that think like you and have the same goals as you. Exactly. And I think that that's really important, Mr. Supreme Cinema. I really think that people need to understand that it's not about getting a Lamborghini. It's not about making millions of dollars. If you're blessed to do that, God bless you. It's really about making a living. If you can make $3,000 to $5,000 from the comfort of your home or doing something that you like to do and enjoy, that could be financial freedom for you. A lot of you get this confused and think that you need to make, $100,000 a year or, $1 million a year to be successful. You really don't, right? You need to find what works for you. And also think about legacy building and things that you're going to pass down, and just be cognizant of who you follow and what you follow them for. Some people you may follow for entertainment. Other people you may follow for politics. Some other people you may follow for, search engine optimization, comedy, or economics. Know what you're following a person for, and know what their strengths and weaknesses are. No one is going to have all of the answers for you. That's just the reality. I like that idea with the Toastmasters thing, though. Happy to be nappy. A few people have mentioned that to me about getting better at public speaking. And that's what, I have bigger plans than just a YouTube channel. So that's why I wanted to create this, to invest in myself so that I could become better at my public speaking, better at my information and my presentations. Right. Are there crypto companies? I got an email from one wanting to interview me. Be very careful with all of that stuff, guys. There is some truth in what Alex and David Icke say. I wasted time with the conspiracy stuff too. Thought the world would end with Y2K conspiracy. Yes. Yeah, that one thing about a con man, right? It ties back in. If you look at people like Umar Johnson, and a lot of the people like Umar Johnson, when he talks about the school to prison pipeline, there's validity and truth to that, right? When you talk about the psychoacademic war on young boys, there's truth to that. Behind every conspiracy is some truth. What I'm saying is that the way that it's presented to you is presented to you to get you emotional and make you stop, thinking logical. And it's meant to get you to just spend your money. Anytime a person is constantly trying to sell you DVDs, water filters, books, seminars, I'm talking about every day is something for sale. You have to understand how much meat versus bone is there, right? You have to understand how to eat the meat and spit out the bones. And if a person's constantly just giving you a bunch of bone and not a lot of meat, at a certain point I have to say, okay, I need to step back, that they're not offering me what I need for myself. Thank you for the donation, quiet is kept. Right? So that's what you have to understand. If a person is constantly selling, buy this, buy that, the world's going to end. You got to start counting how often are they correct and how often are they wrong. How often are they correct and how often are they wrong? So yes, there's a lot of truth in the things that these people say, but how they're presenting it to you is about getting the money out your pocket. Because if the world's going to end, I don't need to buy your book. I need to start getting prepared, right? Like the last thing I need to be doing is buying your book. I'm telling you guys, the world is not going to end. The world is filled with difficulty and opportunity. There's going to be opportunity just like there will be difficulty. The stock market is crashing. Go look at Zoom stock. Zoom stock is booming, right? So while the stock market's crashing, guess what? Zoom is pumping. A lot of the companies who are going to make parts and ingredients for these testing kits and the drug makers like Gilead Pharmaceuticals and etc. When one of these companies designs a vaccine, that stock is going to pump. People who can create ventilators, being that there's a shortage in ventilators, that stock's going to pump. If more people stay from home and they're doing, video conferences with Zoom, that's going to help that stock. So while there's a lot of difficulty here, there's opportunity over there. That's the way things operate. It's difficulty with opportunity. You have to understand not to panic, take calculated risk, but before you take risk, you need to have a savings account. Like I tell people this all the time. Like a lot of times people hit me up and they say, hey, I only have $100. Should I buy some Bitcoin? And I tell them no. And they say to me, what are you talking about? You have no business investing if you don't have a savings account. You should not be investing a dime of money unless you have a savings account. Right? Like if that's your rent money, you have no business investing that. If that's your tax return money, you have no business investing that. What you do as an adult is first you take care of home. Nation building starts at home. You can't be successful if you're not successful in your home. First you take care of your home life. Get your house in order. Pay down some debt. Right? Don't over leverage yourself. Have income ratios and debt ratios that you want to have in place. And then after you take care of the home, and you have a savings account of $5,000, or depending on how big your family is, you have at least 2 or 3 months of emergency expenses in that savings account, right? So for you, it may be $5,000, it may be $10,000. Build up a savings, and then you start investing over time. Okay, I'm going to invest $200 every month. I'm going to invest $200 every month, or $150 every month. And you're looking to say to yourself, I'm 25, I'm 35, I'm 40. If I do this for the next 10, 15 years, where will I be? Dollar cost averaging, right? Trying to get real estate every 3 to 5 years. Buying a multifamily unit every 3 to 5 years. I'm not telling you to buy no penny stock and let it go. You're going to buy it for $1,000. It's going to make you $1 million. That's a lottery ticket mentality. And I don't promote that. I don't promote that you're going to buy a course and a course is going to make you successful. Right? All of these things take time. Right? But what I'm saying to you is that you have to start understanding that you're not going to be 20 forever, and you won't be 30 forever, and you won't be 35 forever, and you won't be 40 forever. Right? You will get older, and you need to start thinking in terms of that. Right? So instead of going on all of these movie dates or hitting the bar, right? Or buying all of these clothes, I'm gonna put $100 or $150 away into this, or $200 in this. They have sites where you can buy fractions of a share, right? You don't even have to buy full shares now. I think what is it, like Acorns or Robinhood? I don't use those apps, but there's apps where you can buy fractions of a share. You don't have to go buy full stocks, right? But you need to have a long-term idea. Now, if you're poor, you have no business even looking at this type of stuff. Right? You have no, if you're poor and you're on like different government programs and assistance, then you need to be trying to invest in becoming more skillful to earn more income to then be able to invest. Right? See, there's levels to things, and some investing is not for everyone. You're never going to hear me sit up here and say everyone should be investing money. It's not for everyone. Right? Find what works for you and do that. But don't try to knock other people because they want to invest. If you believe that politics is what you need to be focusing on to get your house in order, then you go focus on politics. Right? Other people may want to focus on real estate, right? You may want to focus on the spiritual aspect. You may feel that everything in this physical world is manipulated, and you just want to focus on, the ancestors, or you may just want to focus on spirituality. Find what works for you. There's multiple ways to skin a cat. Find the way that works for you. But don't try to control others and force others and bully other people into having to think like you or live like you. And don't try to demonize and villainize and vilify people because they want to do things differently. Find what works for you. Honestly, I was once that person who didn't have a lot of money thinking about investing in stocks. Yeah, and for some people, they may not just have the means or the time or the skill, and that's okay too. Thank you for liking the video. There's 205 of you watching the video. Thank you for doing that. Boom. What would you say to those hoteps that want their own nation, yet their home situation is shabby? I would say, when you deal with a lot of the hotep brothers, right, and sisters, a lot of the information that they present is good information, right? As far as to, trying to start something or work with other people or build something for people whom you have a connection with, whether it's a religious connection, spiritual connection, some type of a lineage, whatever the case may be. There's nothing wrong with working that way. The problem with a lot of these hotep brothers is that they don't have the actual experience with what they're trying to do. Like, start with where you're at. Like, for example, you don't see me up here telling you that I want to start a school for boys, right? Because I don't have the experience to do that. I don't have the life experience. I don't have the credentials, and I don't have the resources to do it. So what happens with a lot of these brothers is that they have these grand, big ideas, but they don't want to put the time into gaining the skill. See, it's easy to talk about something, but are you going to put the time in? Are you going to read the books? Are you going to read the blogs? Are you going to travel to the places and do the things that you need to do to actually execute the things that you want to execute? All right, you want to be a real estate guru? Are you going to put in 5 years or 7 years to be that guru? Or are you going to read a bunch of information to deceive people like you're an expert to get money out of their pocket? See, that's the difference, That's the problem. Like Umar Johnson, for example. Like, I don't make any videos about him, but I like to use him as an example. There's no way you can tell me that man's worked in the school system for X amount of time and he behaves the way that he behaves. He makes the mistakes that he makes, right? Where he's costing his donors $160,000, right? So a lot of the information that he may present may be good, but clearly he's not in position to be no leader. And I think that that's one of the biggest problems with a lot of these hotep brothers and sisters is that they get too far ahead of themselves and they start throwing out all of these words and terminology and ideas. And they don't really take the time out to ask themselves, is that even valid in 2020? Right? Is that even valid in 2020? Will that be successful in today? Like, why would you want to start a school in 2020 when everything's moving to online stuff? Like, why even want to do that institution when you can have more impact on creating an online school, right? And creating a whole bunch of small satellite sites throughout the world rather than getting this one big grand institution, because you just don't have the revenue. You don't have the pedigree yet to do that. But again, it's just, you're dealing with people who they don't want to take the time out to really learn those things. So that's where, that I think that's one of the biggest problems. I really think that that's one of the biggest problems. And I think that, you have to be willing to invite people in outside of just your immediate circle who may disagree with you, right? It can't just be, I'm only going to work with black people. Like if that's your mentality, that I'm only going to work with black people, you cut yourself off from so many other sources of funding, from so many different ways of approaching ideas, and from so many of leveraging your ideas. Like if you just say, oh, I'm only going to work with Asians, I'm only going to work with white people, I'm only going to work with, black people that are heterosexual, that are over the age of 30, that are alpha males. Like if you do that, you just automatically destroy your business prospects. right? You destroy all business aspects, because there may be this Asian guy or this white guy over here that he may have the connections to get you a deal on a school building or to get you the proper permits and stuff that you need. But because you're being, disrespectful to his culture or whatever the case may be, it hurts your chances. Like you have to be a three-dimensional thinker and leave all doors open, because you will be surprised how many people think like you from other ethnicities and other backgrounds who may want to work with you or partner with you. See, people don't understand, like, I can work with you. I don't have to give up who and what I am to work with you, right? I can have my principles and my core beliefs, but still work with you on a project or on business. It's not about, I'm not going to work with this person because they look like this, because they may have the resources to get that job done for you. So I just think that a lot of it's just, it's like a foolish mentality, which is why it doesn't work, which is why many of them can't get anything off the ground, because they just alienate so many people and they isolate themselves. So now no one wants to work with you. Like you have to be a thinker that way, and be like, you don't have to sell out, right, to work with other people. You can have your core principles, and everyone can be understanding, like, this is how we're going to do business. For example, if it's two of you, right, then everything should be split 50-50, right? It shouldn't be you giving up all of your rights or your publishing or your distribution to get on. No, it should be a fair business exchange. But if this person's contributing more to the operation than you are, then they should be compensated more. I just think it's about equity and being fair, and understanding how to work with other people. Like, and understanding the rules of the game and what you're playing in. And I think that so many people miss that. And this is why many of their projects fail, because they just don't know how to work well with other people, and they don't know how to respect other people. Like that's one of the biggest problems too. Right? Respect goes both ways. First, you must respect yourself, but then you must also respect other people who may disagree with you. But many, like I said, many of these, people, they have very limited life experience. So they don't really know how to work with other people. See, that's why it's important to have a professional background and work in corporate America, because you understand, like, you have to be able to work with other people. You're not going to start any major business in any major way, because at the end of the day, I'm not a fan of globalization, but I understand that's just the nature of where we live in. You have to be able to work with other people and other cultures and other ethnicities. You just have to. Now, are there some exceptions to the rule? Absolutely. Some people can, just do the all white thing or all black thing, all Asian thing. But most successful, thriving businesses and companies that I see are people who they work with other people in some capacity. And that's just the reality of how things are going to work. You have to know how to work with other people. So, but we went on for 100 minutes now, which is basically an hour and 40 minutes. So I'm going to end the live stream here. I'll probably do another live stream tomorrow. Thank you guys for tuning in. Please like this video, share this video, subscribe, hit the notification bell. Please join my mailing list so that you will be notified every time that I go live or I upload a video. Also, if you want to support the channel financially, my Cash App and my PayPal is in the description below. I want to thank everyone that's donated today who's watched this video. If you've tuned in late,